Good evening, everyone. Welcome to this episode of Market Pulse. I'm Ajit, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and are likely to do in the coming week. So let me just go to this daily chart because this is what I have been anticipating and mentioning that that's a fresh area of supply zone, and Nifty did go and test that, and from there we had a very strong reaction. Okay, so and this is what we call as decoy. So let me just now remove everything. Nothing has changed on the monthly. This is a new month, about not even 2 weeks complete, and we should be able to have some understanding about the continuing short-term trend by end of this week. So this week is going to be pretty critical. Still, the whole demand zones remain as it is, and as usual, we don't have a supply zone but a pivot on the monthly chart. Going to the weekly chart, that's the area of supply zone, and which is what we pierced. So this is you have to understand is a pretty typical price action by institutions where all breakout traders will get trapped here, so they will buy beyond this, and that's where liquidity will be generated. So this is a classical sign of that. For Nifty currently, this is still going to be the range on the weekly chart, weekly demand zone. So that's going to be our main range. But at this point, we do have some area of demand zone at about 17,600 based on the weekly, and this is right now holding. Unless and until we take off this high, this demand zone won't make sense, or this demand zone. Remember, after this strong rally into the supply zone, we are for the last 2 weeks, we could not manage to close above. We managed to close lower, and we have red candles. This week, probably the suspense will be over. Coming to the daily chart, that's how I look at it. This is the main area of supply zone on the daily chart. It went this time all the way to the distal. Uh, so we went to the proximal. That was the first test, second test, and the third test went all the way in deeper, and we came to that pro gap which I was mentioning here. Now, there are 2 continuous days of selling. We have an eventful week with India's inflation number coming up today, tomorrow US CPI, and then Fed meet. So the volatility will remain elevated this week, and probably a direction will be given, which might be at least up to this on the lower side, on upper side, probably all the way to the all-time high. But looking at the daily areas of demand and supply equation, the next area of demand that I would look at currently is only at about 18,325. So this is going to be the range on the daily. Probably as the week progresses, we will understand the new trend, and there are good chances of the demand breaking rather than all-time high on the Nifty, and fresh areas of demand zone around the so pretty wide range, and this week would be a defining week for the index. Either we first pull back to 18,300, and once we break 18,000, remember, we could be gliding down all the way to 17,576, but that's the range right now we have. And on the intraday time frames, that's area of supply zone, which could act as a nice trap and a decoy because it's fresh. And we are yet to test it right now, but the price looks more inclined towards moving downside. And if we break these areas of demand zone here at about, let's say, 18,400 is broken on the spot, and we close, the first target would be somewhere close to 18,050, and the second one will be somewhere close to 17,800. So the natural bias is towards the downside, but wait for more confirmation, as this is going to be event filled week, and I would not be interested in getting long. And if you're long, it's high time that by tomorrow you book out your profits and wait for more confirmation to get in shorts. If I have to tell you this, the smaller time frame intraday range, this supply might just be a very uh, 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 rigid supply that will be very difficult for the index to break. So from 18,725 all the way to 18,450, that is going to be our next couple of days intraday range. And based on the Fed outcome and the global markets outcome, we will be probably defining the new trend, either up or down. All right. A quick look at India VIX. Nothing has changed. India VIX is still low and good time for option buying. Option writing should be avoided, especially put option writings if you're getting into it. You could be in for a surprise in the coming few weeks. So be uh, on the option buyer side since volatilities are low and not on the option seller side. That is going to be, I mean, on weekly options, yes, you can do that, but not on the swing positions. And volatility is expected to rise at least up to 13 and then 15. So be careful about intraday levels. A quick look at Bank Nifty. Bank Nifty is getting more weaker as compared to Nifty because Nifty did continue new high, current high, but Bank Nifty was unable to break this, and we are again testing this. So this is more of a scenario where the fight is going on. And once we close below on a daily basis, about 43,500 or years, we could be headed towards much more lower prices. On the monthly, nothing has changed. This month, we are seeing some, for the first 10 days, we are seeing price being in a range bound. But remember that once that range bound price is over, we will have a big fall. Whether it happens this week or next week, we don't know, or this month or next month, we don't know, but smaller time frames will hold clue. The immediate targets could be somewhere close to, let's say, 42,000 for Bank Nifty. So weekly gives us a much better picture. There was this a nice decoy about that, wherein prices just went up in more orders. So the liquidity gets generated at that area where breakout traders will be available in abundance to buy, and that's where the institutions will have a good area to spread their positions across options, futures, and maybe even cash selling. So yeah, that's the weekly supply zone, and the weekly demand zone fresh is all the way here. Okay, so that's the first, that's immediate target. And if you see this, let's say, even if I have to look at smaller time frame, this could be the immediate target about 42 to 300, and this is a pretty classical pattern. Once we break 42 to 500, we and 700 and 500 will probably head downwards, and these are the areas where swing longs can be looked at on confirmation, and these are your two fresh areas of demand on the weekly. So we are very overextended and overbought scenario. New long positions may not make much of sense, and that's what we see on the smaller time frame. No demand zone, at least up to 40 to 300. So the reward to risk towards the short side is very, very high as compared to the long side because we are facing stiff resistance at that pro gap. So be careful about thinking about a swing long. You can have intraday longs, but not swing longs. But on the short side, we could move all the way to 40 to 400 ways on the daily chart, and then next area will be about 41. The fresh area of demand will be about 41,600, and main area will be about 42,800 to 42,400. And on smaller time frames, if you're an intraday player, so that's the area which has nicely held. So this is the area which probably is not easy for Bank Nifty to break, and we went up, but we did not break that high, and we're coming lower. So this is the crucial area of demand zone. Once we break this, that's 500. That's what I was talking about, and have a daily or a higher time frame close below this demand zone. The thing will be open for first targets of 40 to 500, and then 41,700, and probably all the way towards 40,500. So current range bound because there are events, and so you do range bound trading, sell here, confirmation buy. So, but I would prefer to be only a seller as it comes up rather than looking at buying and exiting here because we are very, very elevated, and once it starts falling, we won't get any significant pullback. So bearish bias once we break 43,500, and then the targets could be higher. All right, I hope that gives you a good idea about the way you should look at trading the indices on and its constituents. Please go to the disclaimer, and I hope this educational video is beneficial to your weekly trading. Thank you.